We are moving right now for the panel 4, which says the conclusion of today's digital lending redefined. I think one of the most very significant topic that we would like to discuss on. Banking, as you all know, has always been about one fundamental promise, providing access to opportunity. And the very heart of that promise lies lending. For decades, lending decisions were built around paperwork, physical verification, lengthy approval forms, that same cycle, process that often tested the patience of customers and business alike. Well, today we stand at the new era, an era where a loan can be approved in minutes rather than just weeks, where AI can assess risk in real time, where data can actually replace the paperwork. And where the customer experience became just not important, but it also helps in credit decision. Digital lending is no longer simply a technological upgrade. It is actually a complete reimagination of how financial institutions will serve the customers. Well, in fact, India today processes billions of digital transactions annually, creating an ecosystem where real-time financial data is enabling more accurate underwriting, better risk assessment, and personalized lending journey. So let's put a light on this topic. And for guiding us a way forward, we have a fabulous set of a panel joining us. Well, first and foremost, I'll invite our first panelist of the panel. I may now request Mr. Suresh Lalwani, Head Sales, Trade Forex and CMS CSB Bank to join us on the stage. Can we have a huge round of applause for him? Next joining us on the panel is Sanju Mangrulkar, GM Emerging Business, Central Bank of India. Thank you so for joining in. I'll request you to please join us on stage. Can we have a huge round of applause, everybody? Joining the dynamic panel is Koteswara, Head of Technology Corporate and FI Lending, HSBC. Thank you, sir, once again for joining us today. Joining this fabulous panel is Darshan, Rathi, Digital Initiatives and Channel Management, Commercial Banking, Yes Bank. Come on, can we have a huge round of applause for Mr. Rathi? Thank you so much for joining in. A warm welcome. May I now call upon Venkatasubramanian, VDGM IT, City Union Bank to join us on stage. Thank you so for joining in. A very warm welcome. May I now call upon Manish Kumar, SVP and Head Liability and Alliance, BaaS Digital Ecosystem, HDFC Bank. Can we have a huge round of applause and welcome him? Joining the stage and setting the context of this entire panel is Rathi Somani, SVP and Business Head, Personal Loan, Digital Banking, Unity Small Finance Bank, and she will be moderating the session. A very warm welcome, Rathi. Thank you for joining us. Can we have a huge round of applause, everyone? Over to you.
Hi, everyone. So I'm Rathi Somani. It's a pleasure to be here with this esteemed panel and between all of you. It's for me, it's been nearly now 2 decades into banking, little over 2 decades. And we are currently in the most interesting times, at least, in my career, I feel this is the most interesting time that I'm seeing, and in the best possible way. I say interesting because at least 23, 24 years back when I was in HDFC Bank, I never thought that, I could ever give a loan to some gig worker, without a salary slip, no ITR, but, some API, some algorithm running, identifying the UPI transactions, identifying the spend pattern, and giving me the comfort of deciding, yes, this is our customer, no credit history, nothing but yes. Similarly, there could be a customer in today's time sitting somewhere in Ahilya Nagar, some MSME customer, and he may get a loan even before his morning chai gets cold. At this point, there are days when we process, tens of thousands of, loan applications, and these are done seamlessly, no human touch. But at the same point of time, what we also see, there a customer may apply for a loan and he gets rejected with a single line, not meeting eligibility norms. No human touch, no remorse, no recourse. This is, the pros and cons of the times we are in, more and more we are moving towards the AI. There is that human touch we are losing, but there will be certain things and certain trade-offs that we'll have to take to bridge this gap. And to understand this better, we have this, exceptional panel who are leading teams who are into, digital lending, who are into the CMS, commercial banking, and, different facets. And they're using the digital piece, the most sought after, the most talked word these days. So let's hear from them. Guys, welcome to this panel. I'm very, very glad to have you all here. And, it's my pleasure to discuss certain things, which I'm sure, everybody would like to hear what you guys are doing in your respective companies and, how you are dealing with things. So I have a list of questions that I have framed because I thought, it would be nice to listen from you guys how you are dealing with these issues. Please try to be as real as possible and, try and help each one of us with your experiences. I'll start with Koteswara. Koteswara, at HSBC, you guys have been doing corporate lending. Corporate lending is a most traditional, where there has to be some RM, there is a credit officer. Now with AI coming in, have the dynamics changed? Are you using AI in, is it playing a huge role in your corporate lending, in underwriting, in assessment? And are there any areas that you wish, where you could, deploy more of AI?
Sure. Good afternoon, everyone. It's a pleasure. Thank you for starting with me, Rathi. So, like with any other technology within HSBC, we are using AI across the end-to-end life cycle. This is to improve customer experience, colleague experience, right? Now, there are many things that I can speak, but I'll start in the order of how we productionize those capabilities with regards to AI, right? Now, the first and foremost thing that we have done within HSBC is we operate in about 60 countries. We have 20,000 relationship managers that are supporting our corporate lending. Yeah? So we have rolled out a digital assistant for all of them 2 years ago. Now this digital assistant is using NLU capability to answer queries from our RMs. For example, our relationship managers can ask a question whether a particular credit application gets qualified under a green loan that HSBC supports, right? Now this year, this quarter, we have also gotten an advanced referencing that is added to that, right? Now, when they search, they get the links from where this search information is coming in, so they can quickly go to the source of the information, because many a times it's important that human in the loop. We need to verify whether the information is from the latest and greatest sources. So we have that now available. We now have automated entire financial spreading. 92% of our spreading happens through a tool called SpreadSmart, right now, in a 92% accuracy, right now. So it also creates automated tasks and puts it to our spreaders at the back of that particular thing. And the most important thing is we are actually doing a Gen AI powered credit paper. You all know that for corporate lending, we have upwards of 12, 13 sections in a credit paper. So 3 sections of that paper right now are written, powered through Gen AI. This is company information, peer analysis, industry analysis. For 45 countries, Gen AI is writing these 3 sections. Our auditors are actually liking it, because if you leave it to relationship managers, they'll write it in their own style, own template, own order. But Gen AI is making sure that everybody is a lot more disciplined. And how do we do it? Absolutely, absolutely. And we are also using GenAI in drafting the transition questionnaire. You know, ESG is a big thing now, right? Now, so we are looking at our clients, how are they transitioning into carbon neutral? So when you are answering their questions, we are extracting the right information from the documents that they are supplying, right? Now, I think we are doing a lot of heavy lifting through AI now, leaving our RMs and approvers to do more of, leveraging that output and accelerate their judgment, right?
This is fabulous. And you said you had 20,000 RMs.
Right.
So is this, just a follow-up question. So is this like, people generally at the moment, people see that, with AI, the jobs will go and, there'll be lesser human and more machines doing it. But 20,000 is a significant number. And what I understand hearing you, it is aiding them in decisioning and
Absolutely, absolutely. It is really uplifting their efficiency now, right? Because we support $1 trillion of loan book, right now, with $2.7 trillion of approved limits. This is across 60 countries, so that's quite a portfolio, right?
It is
now.
quite a
So,
portfolio.
yeah.
Wow, great to know
Cheers.
that. Moving on to Sanju. Sanju, you are from Central Bank of India, and in many public sector banks, they carry a large amount of legacy data, and which is very complex. It will be dated, and not just public sector. There'll be even private or banks. We'll have age-old data, which will be there, may not be in a digitized format. So how is AI being used not just for new origination, but also for monitoring and early warning signals on the existing books that you have and the existing data, the customer data you have? How are you using AI, if you're using, or share your thoughts, how it can be used?
Hello. Yeah, good evening. Yeah, that's a common question for the PSUs because we have 104 years legacy. So initially, since all the data is under now core banking, so definitely the manual, we have come from the manual phase to now digital phase. And now, as per the regulatory aim, most of the PSUs, the first thing is control and compliance. Every alternate day, for supervision, someone will come for compliances or the procedures, because there is there that all the private banks and BFCs, they are initiated with the tech platforms. So it was easy for them to get advanced through GenAI and ML and AI. And all the PSUs are started late, but now they have coming at par with the other lenders also. And looking to the stress in the accounts, because I was earlier heading the collection department also. So there the first thing was done through this, our early warning signals through the platforms. Because so much now technology is advanced and so many fintechs have come up thanks to the technology. Because of them, it has become very easy to identify the early warnings. Because we have about 108 or 130 parameters are there for on early warnings, of which regulatory are there around 86, means RBI has prescribed that this early warning signal should be there. So throughout the journey, through the CBS and through the platforms, we get from the account opening, from the liability side to the asset side also. So all the parameters, and we see even we see the bouncing of the check. It is a normal course, but we see the frequency and what is the trend. In that way, all the alerts have been analyzed. There is again early warning for that. Fraud monitoring group committees there of the GMs. That will be monthly, it will be analyzed. And based on the analysis, again, it will be seen that whether is there any fraud proning some transactions are there, or any transactions which think that we are not related to the business. Again, it is being taken up, so it is definitely helping us in analyzing the behavioral pattern of the transactions, as well as the area which we can focus more. So that was the more intention. And because when the account turns to the NPA, again it has gone to the for back testing. There again that what are the EWS signals at the time arrived. Based on that, it is seen why it has been not founded earlier, or if it account turns to fraud, why EWS has not been focused. So these are the things. So that's why, and these things help in developing the things ahead and getting the good quality business.
Very interesting. I think there's a lot to learn for each one of us on the early warning. So I think that's an interesting point. Next, I think this is nobody likes change. I think you all will agree none of us like change. So I have a question for Darshan. Darshan, you take care of digital initiatives, and I'm sure you're dealing with different teams like tech, risk, business, and when you come up with some initiatives, do you see any resistance from any of the teams in particular on the AI implementations, whether it is tech, business, risk?
Interesting question. So, like most of the panelists here, resistance principally comes from one vertical within the three verticals. Tech team is always eager to learn new tools. They are eager to experiment, eager to develop something. So they will always be eager to implement new technologies. Business, there will be a bit of resistance because any new change for the ground team, it becomes difficult to understand, to keep to implement within their day-to-day journeys. But eventually, once they start seeing the benefits of the change, they definitely would like to explore and implement it. Risk is, as we say, it is the custodian of the bank. So any new change, they will definitely like to understand the nitty-gritties. How does it impact us regulatorily? How do we save the client, the bank's interests, as well as the regulators' guidelines are implemented? That is something which they will always look into in detail. So, yeah, resistance can be confirmed
For a
from.
very large part, I have been on the risk side, so I can,
Yeah.
I think, empathize with it. So yeah, I think there will be resistance. I think maybe for good, I think, because they
Right.
probably want to understand it
Right.
better. Yeah. Great. Coming to Venkat at City Union Bank, you deal with, I'm sure you deal with a very specific segment also, which is SME and the semi-urban. So how do you design your models or AI models which can actually be predictive for this profile where, bureau data and the formal income documentation may be thin? How would you do that designing? Please, if you can share your thoughts on that.
Yeah. Good evening, everyone. See, actually, this is a segment where every bank would like to tap because there is a lot of huge potential around this segment of SMEs where they are not into formal digital economy. So definitely we are also one who are chasing them, to bring it to our fold. Yeah, of course, since they do not have any formal information about them, we should explore the alternative methods where we can bring them into, digital lending. So there are many ways through which we can bring them actually. See, if you see anybody will have a bank account, basic bank account definitely they should be having. Maybe they may not be having GST or a bureau data, which you mentioned already. But they will be maintaining some registers at least to manage their business. So with this, I think all with the aggregator framework and their cash books, certainly we'll be able to know them better by identifying what are the transactions that they do, what are the customers that they are dealing with, what is their pay in, pay out, their transactions, the pattern, how they do. So there are a lot of ways through which definitely they can be brought into formal AI modeling through which, a bank can underwrite their loans. So apart from that, psychometric analysis, there are various other ways also around beyond AI. These are the other peripheral process through which we can assess and then we can bring them into the fold. So that is where our bank, as you said, our focus, most of the portfolio in our bank are SME. Yeah. We are specialists, we support SMEs basically.
That's interesting. Coming to Manish, Manish, you are into liabilities and alliances, DaaS, digital ecosystem. So you sit at an intersection, of all these ecosystems. How does, from your vantage point, how do you think that AI-driven personalization is it a bigger opportunity on the asset side or the liability side? I understand you are on the liability side, and we would be really keen to understand from the liability side how this whole AI can be used for personalization.
Yeah, thanks, Rathi. So basically, if you see any initiative which we started, when we carved out this new department of banking as a service, so we overestimate the impact in a short term and underestimate in the long term. That's how it starts. And then there is a lots of switching costs involved. But one thing, one is like infrastructure layer, which is created by the bank, FinTech and those. And then we started experimenting thing. Second, most important part was, I will say hyper-personalization, because this is a customer experience layer. And when we are talking about the hyper-personalizations, the customers, from customer lens, they don't see, we are not only competing with the bank or the FinTech. Okay, now it is also with the Netflix, Spotify, Amazon, because they have become used to of those kind of the digital experiences. So our task is with them. Now what we started doing is, see, everyone is doing on like strengthening, creating impact and reimagining, managing kind of things. So whatever the platform that we are going to give to the customer, first we see the basic propensity things which was happening in terms of the hyper-personalizations. Okay, these are the customer, these are my rule says, and I can offer them basis their risk appetite also on the asset side, and I can give the next best offer to them. What AI hyper-personalization has done is, now we'll able to predict it in a much better way before the customer express. So this is something, so the kind of tie-up and the things which we have started doing this, we'll able to go to that level. Yeah, so there are many initiatives which we have taken, starting on the liability side of the business. We do lots of data room exercise with the top platform where our customers are going, doing those analysis and insight, gives an insight why our customer are visiting and going to those websites and this. And then we create a strategy how we need to club and stage. And in that part, hyper-personalization is actually playing a big role. And we are seeing a good term. So we drive a metrics called customer product holding. So the moment, the customer chooses more than one product from you, the stickiness increases and everything increases. So we have seen the pattern is increasing, the TAT is removed in terms of the holding of the clientele base on that side. Yeah.
I think he said a very interesting thing, which is like, we are not competing with banks or financial institutes, but we are actually competing with Netflix and Amazon of the world, because that is what, today the experience every customer wants. I mean, at least I would expect, from my bank. So that's a very important thing. Manish, coming to you. I'm sorry, Suresh, coming to you. Suresh, you head the sales, trade, Forex, CMS, etc. at CSB Bank. Cash management and trade finance have traditionally been a very relationship-driven business, very paper-driven business, document-heavy. So how is the digital lending mindset or the digital banking mindset, instant decisioning, API integrations, paperless journeys, beginning to reshape even these, in this, traditional piece? How is it helping?
Hi, good evening, everyone. So, Aarti, just to start with, I think all my fellow panelists are IT or digital guys, except me. So I might have a different perspective which these people have. So when I use this word digital lending, so digital is what? Tech and AI and anything which is speedy. Okay, for me the golden word is lending. As a banker, if I'm able to lend to a customer, that gives me income. Digitally or non-digitally is secondary. So second, that's the point. Second thing is that when you're saying traditionally corporate banking, transaction banking, is having so many papers, I will correct you here, it is today also. So digital work has not reached to a corporate banking customer as of now. I tell you from my experience, today a treasury guy sitting in a corporate world, doesn't need speedy loan. Okay, he doesn't need a loan in 1 minute, 10 minutes, 30 minutes. He needs only a banker who can tell him that, okay, you will get a loan. Okay, the decision making has to be fast. So my friend from HSBC, when he was saying that there are 21 points, they put it on AI. So that is making the decision faster. They're not giving them money in 1 minute or 2 minutes. That happens with retail banking. So when we're talking about corporate banking or my perspective of transaction banking, the paper has not gone. Okay, the decision has to be faster. That is what my customer wants. Okay, so digital banking has to be make it in such a way that my person or my corporate customer can understand it and do it. And one more perspective which these people may or not agree, that my corporate treasury guy is having fatigue. Okay, he sees so many apps coming onto this. You log in into this, you log in into this. Because he don't want any logins. He want one password where there's an invisible banking. He log into his ERP. He sees an invoice, and my bank should tell him that you can get a discounting on this invoice. So that type of service he wants. So as of now, what is happening, and again, nothing to offend anyone, we are giving them what technology can give. We are not giving them what actually they want, specifically for corporate customers. Retail customer, what you said, someone is sitting in Bihar, some place, and he's getting the lending done in 2 minutes, 3 minutes. That's a totally separate business. When we are talking about a corporate customer who is talking about $100 million, who is talking about 100 crores of funding, you can't do it in 1 minute, 2 minutes, okay? The only thing is that he should be 100% sure that he will get the funding so that he can bid for that contract. So when he's getting a contract, my bank should be ready to give him the money. So that is my perspective. And again, once again, nothing to offend anyone, because I am not from digital IT world, so I have a different perspective. So
it is great to have this perspective and to understand that side of world also. So that I think very helpful. I would come back to you, Koteswara, and I have a question for you. You know, when we look at a full lending life cycle end to end, so which part of the chain is most underserved by AI today? And you know, where you see there is a big opportunity?
Yeah, I'll certainly go to that question, but just to answer Suresh around that thing, right? So I agree with him. I think a lot of things that we said, right, where it's very, very important for the borrower to know whether we are there. But however, I would say that the currency for corporate lending continues to be time to yes and time to cash. The banks are differentiated by these two currencies, right? And people have the KPIs for it, because you do have multiple options, especially, and when your time to yes and time to cash are pretty longer, the chances are that the borrower would come to the bank, who of course, when everything else is similar, the bank that would tell them time to decision, time to yes, right? It's very important. And also, I would like to say that, you know, during the period of COVID, where the people movement was questioned, we have dispersed billions of dollars, right? Under pay protection plan, under COVID plans across India, across Hong Kong, across US, across UK. This is all done when the people were unable to come out in the streets, but have given corporates money digitally. So the digital money has shown that it is needed in the times of stress when the people were not involved. It was not manual. So just a couple of examples on where digital still makes sense right now. And by the way, the definition of digital is the self-serving is the highest form of serving a customer, right? So if you are digital, you are actually going to the highest form of serving. So just my alternate viewpoints, right? So coming to your point around where all we think AI could be used are not yet tested, if you will, right? So we've been using AI for productivity gains, for sure, right now. But I think we are also using now, experimenting AI for decision intelligence. And I'll give you 2 or 3 examples where we are doing it. One is in the financial analysis. So I mentioned about financial spreading where we have speeded up the process. But once you spread it, what do you do with that data? Right now? So you need that analysis. We are now going beyond RAG and prompt-based methods. We are using multi-agents to do both, causal analysis as well as, because it's very important, right? It's very important to understand how the finance is moving and what is triggering that movements of finance of the customers, right? Now, so we are now getting very deep analysis and also dependable analysis, defensible analysis to say this is what your technology has said, right? Now, we are using now agents for perpetual monitoring. So you can see any document that is being expiring, an agent will automatically send a note to customer. The latest document is sought, it auto-validates, puts it for human in the loop for further compliance and then update. And that's all happening now as we speak, right now. We're also using AI in legal due diligence, right now. One of the things that we are doing is in balance sheet velocity where, you can do the distribution of all the loans, where it is. Legal due diligence is a very tough thing, right? Time-consuming thing. So we are using Gen AI to extract the right legal concepts out of the documents and putting it in front of our distribution LDD staff, right now. So here you can see it is actually augmenting the human intelligence, right now. So this is where I think the next frontier, I would say, the decision intelligence is where we are taking AI from productivity.
Thank you. Sanju, I have a question for you. From a credit policy standpoint, how comfortable are you placing decisioning weight on an AI model output? That your credit committee cannot interrogate or explain because, RBI expects, the regulator expects that we should be able to explain. But yet there are models, which we cannot explain. The AI/ML models, it's difficult to explain them at times. So how comfortable you are placing your decisioning weight, credit decisioning weight?
Okay. If you see for the ETB customers, already it is in digitally been, record has been there. Now, if you see recently, now RBI has announced that emergency credit line of 21,000 crores budgeted there, means first come, first served. Have we been in the same traditional method, we couldn't have achieved anything. By this time, around I think 10 or 11,000 SBI has already covered. Because all banks are now adopted DLP, a digital lending platform, a straight through processing. Because they are all the existing customers. So only the part, your KYC part is already there. Only their bureau records that's already through digital, we are getting the digital rate. And their stress position, whether they are in the default or not. Because up to SMA 1 also they are eligible as on cutoff was the March. So that record is also available. So the speed was the thing. And in our IT department, till late night the branches are punching because branches are not so much equipped with this type of digital lending. So initially that hiccups were there, but now able to get through, and now the staff are also feeling good we are moved on to digital platforms. And as you said, that for any analysis part, majority are there. Through our data is almost available. Most of the data like cash flow is available, or through bureau we get the records. Similarly, what are from the media or news, what are the latest about the company, that details we are getting. And other company data from MCA sites and all other data are also available. So majority of the part is through process it has been happening, but still some parts which I will say that required to be, like the balance sheets, that because audit report, what are the observations, audit notes, these are very crucial in analyzing their further contingent liabilities. So as such, we can say around 75% we get all the data required through digital mode, and 25% we can get through this in a physical mode. Maybe through advanced technology, definitely it may be coming, and I think some banks are also moved on to that, they are getting also. And wherever these are available on the public platforms, the data is easily available because audited balance sheets are available and everything is available. So only the cases where the partnerships are there, LLPs, or if you do not find in the public platform, that data we need to be fetched and further wherever that inspection has to be carried out, because that has to be done physically. So that was also that we covering through the geotagging, so that that can be again uploaded and like that. Similarly, your GST returns are helping us to analyzing the borrower. Okay, how, I mean, whether the GST returns are, it is one time filed or delay is there, or they are expired GSTs, or circular trading is there among the groups they are doing and just showing the turnover, inflated turnover. So these things are, these analytics are helping us to analyze these things, and definitely we are enhancing, we are finding that the quality of the proposals are also increasing, means underwriting is also improved with the AI technology, and definitely in future there will be time that 100% documents will be digitized and will be available, apart from one or two like inspections where it is required. Maybe some technology or something may come, because now robotics is also in playing a major role in processing part, and even from the brick mortar branches to we are going into digitized branches, means no man branch also it's there. So definitely they are cost saving, time saving, speedy, accuracy, and we think that the time ahead definitely they will give a, because now the customer wants immediate, because if you are not able to give, the your competitor is ready to pay.
Absolutely.
If you see the vehicle loans, the customer when comes, he says that we want the vehicle in 1 hour. Means our process, whatever way you do, if you are not able to, the other bank is doing. So that way we have to adopt to the technology. If you like or not, it is not a question. But if you want to be in the business, if you want to be in the
game, then
in the game, you have to adopt the technology, and you have to be, yes, so that only you can channelize, and end-to-end process is the only solution to expedite the process.
Sure.
And definitely all the even PSU banks are also giving much competition to the all the lenders. Now, since I have moved on to the your other emerging portfolio, where we find even this trade receivables, which are on the platforms, where like platforms like Invoice Mart are there, or Artec are there. So on that, the suppliers are directly, supplier or through the buyers, they are uploading their invoices, and through the codes and through, so they will get the competitive rate of interest, and all the processing and other charges which require also been reduced, and it is a quicker process, and any bank can participate in that, and they can get the finance.
Yeah.
So this is now taking up place more than the regular your bill discounting facility. And other is the co-lending with the NBFCs. They are getting some tens, hundreds of accounts, which are then again sold to means part co-sharing with the banks. So we see their basic through BRE, whether they are eligible or not, initially through the go, no-go process. And it is a quick financing also it is happening. So like this, even NBFC is also growing in this way. Similarly, your direct assignments, pools also, pools of a big, some 100 accounts or 200 accounts, they get the pool. And that will also means, because if you go through the financing individual customer, it will take more time.
True.
But if it's already been selected pools, out of that only we have to select which are the good and which are to be quality oriented. So, and this is taking up, and with this trade receivable, because here you are getting MCLR plus some, you are giving the rate to the customer, whereas on the your platform you have to give 6.57 or 7.5, because if you don't quote, other bank will quote.
So
The competition is very high, so we need to be move on to this such type of platforms.
right. Thank you. Thank you. Darshan, on that note, so digital, today customer acquisition through digital channels have become easier. Is customer retention and life cycle deepening, keeping pace with it? If yes, how does AI fit in this journey, or how does AI can help in this, customer retention and that whole life cycle management?
So, firstly, I'll like to address one point which was raised by Suresh as well. Like, what exactly does digital aid a banker, or how does it help him address his solution? So today, traditionally within the commercial banking space, which Suresh was pointing out to, traditionally how it used to happen is once all the documents are received, a relationship manager used to take anywhere between 1 week to 2 weeks to arrive at a in-principle decision. With digital, it has become within a day, even in the commercial banking space per se. So your spreads, automation, or decisioning on key parameters, or your rule engines, everything being in place, this has become a bit faster. So definitely that is something which a client as well as a banker is looking up to. With regards to now, since you have already onboarded a customer on the bank, now you want to penetrate him deep and provide more solutions to him. So that is something which we at Yes Bank, we have been exploring. We have come up with multiple transaction banking solutions. So whatever be an intimate need of the customer, we try and give them different solutions around it. Something which we are still looking at is how do we penetrate and provide more solutions in detail. Like suppose if we want to provide invoice discounting to our existing banker, to our existing customer, who is maybe a small corporate or a mid-corporate kind of a customer profile, where for his customers, how do we provide invoice discounting on the go? So something which Sanju had pointed out. While Trades or some similar platform are providing this solution, but even if you have an in-house customer, how do we provide him solutions for that? We are something exploring on.
Venkat, I have a question for you. You are from the IT side. Banks often have a very tight budget, and we are all fighting for budgets, at least, in my bank, we are continuously debating, whether this should be first or that should come first, because you are keep continuously weighing out. How do you prioritize where AI investment should go, whether it should be in origination or it should be in monitoring, collection, or customer experience, when you cannot do everything at once? So what would be that prioritization to your mind, if you had to decide on the budget?
See, the fight is not only for AI, even for the IT applications as well, right? So, so what we did is we presented something rosy, and then we got a separate budget. It's our internal thing which we did. But generally, what I would say is, as you mentioned, we are not going to achieve anything at one go by putting the AI in place. So we have to go in steps and see what is the priorities of the bank or the organization, what is that we are trying to achieve, and how we are going to leverage the technology. So to me, if I say we can have in an order of like, first would be the compliance and the transaction monitoring, which I would rather suggest, where you need to have a big focus so that you are complied with many areas, including the regulator. And second would be around the fraud risk management is what we should look at in terms of implementing the AI. And third comes your CX or your digital lending or whatever it is. Because if you lose something on compliance, I think your budget get erodes. If you're non-compliant by way of penalty, or if any fraud happens, then recovering that money becomes. So certainly we need to see how we are going to, where we are going to apply this AI, and how we are going to achieve the results. That is what I would suggest. If you see our bank, we recently started even COE of specifically on AI by tying up with a big college, where we wanted to expand more the talent. Actually, basically we want to acquire more talent from the college itself. So what we did is the analytics team from the bank, from the college, and of course we have good professors who teach us AI to the students. So in collaboration with all, and we engaged one other company as well, so where they also brought in some good experts, data scientists, and who they can mentor the students. And the first thing what we did is the use cases when we were building, first one was to see how we can automate or use the AI for to be ready for the RBI audit. Because it is a very painful exercise every bank undergoes whenever they comes in. They sit for like 30 to 45 days. So we wanted to see where we are with the past history and then see how we can satisfy them by providing the right information. So this is the first use case that we thought we'll develop in terms of the AI.
Yeah, that's interesting. Thank you for sharing that. Manish, coming to you. DaaS and digital ecosystems imply platform and a partnership model. How can one ensure that when a partner's AI drives or, their decisioning model is driving the credit decision or, customer onboarding decision, your banks or your organization's risk standards are not compromised or regulatory accountability is not compromised?
Okay. So I think it's always start with a vision that from the bank lens, we see like what is our priorities, okay, which segment, where we want it, and then we think through in details on the business scoping side, and then it's start with the onboarding the TSPs or the FinTech. And then there is a set of the rules which is well established, there is a testing to be done, those audit, and then all data security things. Once everything is established, we do this. Then I think it's more about collaborating in the right perspective. I think I missed some point.
It's like how you don't compromise your risk standard or your regulatory accountability. Because you would, if you are having these partnership models,
correct,
and the partner would take, these all DLG models that we have, or on the liability side or on the asset side.
So this is like not an option but an option for them. Okay, so we give what we wanted, okay, and whatever the proposal, and then we see like, okay, in the value chain, how exactly this partnership or collaboration is going to help. So I think the business acumen wise, we are very clear, and we know like bank bring lots of trust, clientele base, balance sheet size and those things. And when we are partnering with this, we have partnered with the FinTechs on the liability and other side and those side, and we have seen like there also things because their clientele base which was already exist. Okay, that also trust, significantly increases. Okay, so.
But do you run any, your BREs at your end also?
Yes. Yeah, that's a basic, like, that's a long, yeah. So 90% of the time will goes in this, and then only, it will.
I think that becomes important.
Yes.
Right. Suresh, coming to you. You come from a sales and a transaction banking background. From that lens, what does a customer actually want from a digital banking experience? And is the industry building for what customers need or what technology makes possible?
So, in my earlier points also, I mentioned the same point. But now what customer actually requires is embedded systems, okay? They don't want multiple systems where they have to log in. They want a system like from a trade finance perspective, if I want to import or export something, or even I have to buy something locally, domestically, I should not go to the bank and ask for the loan. The customer sometimes feels that if I'm buying from Reliance or I'm buying from Tata's, like trade system is there or some systems is there, why should I go to that system? Why can't my bank comes to me or my ERP can tell me, okay, you're buying from Tata, now you can get a loan at 90% at this rate of interest. Why can't that pop-up comes to me and I just click on that and I get the credit on that? So something of that sort, because even a corporate guy wakes up in the morning and doesn't ask for a loan. It is not like that. Something I need it in a day or so. I again say the speed might not be the requirement from a corporate perspective, but like something decision making and should be firm decision making. It should not be ifs and buts. If you do this, we will give you this. If you don't do this, we will not do this. So when we are talking about AI, when we are talking about digital platforms, when we are talking about some technology things, if I give 1, 2, 3, 4, 5, 6 pointers, I should be that system should tell me, okay, you are eligible for this at this rate of interest. If you do this, you will get this. Or reverse. If I'm suppose dealing a customer in suppose Europe, okay, and I'm trying to deal with that customer, my banking system should tell me, oh boss, don't deal with him. He has already done a fraud with another customer in HSBC bank. But that's his way of doing business. Because again, these are not retail customers who are looking for small amounts which may not happen for them, but they are looking for a big chunk. And they are the people who create the infrastructure for the country. Okay, they are the people who are actually giving like revenues, they are giving the jobs. They are the people who are the nation builders. Exporters specifically I'll talk about. Now, next step, which I think is that like custom digitization can be done, where we can digitize with customs, DGFTs. Okay, we can now e-bill of lading is started working, but still not been used because all the customs have not started using it. All CHAs or all FNS are not using it. So something of that sort, which we can give them that trust, that confidence, which they have when they're using an UPI. Today, you use a UPI, you don't get afraid that this money will go anywhere there. But in a Forex trade, there's a lot of things. Like the difference is like there's a different country, different time zones, different currencies, and then different regulations. Now, in India, we have a different regulation for advance import. US might not have the same thing. So something of that sort. Today, you make a payment to someone in US, but goods coming from Iran. Your money will get stuck. So my customer wants that type of agentic AI, or I don't know the term, whichever AI you can use the term. But whenever he's doing a transaction, he should get a factor. Oh, boss, don't do this. This customer has already done fraud, or he has already done a transaction which has got restricted earlier. Or this product, this HSN code is not applicable for subvention. If my SME customer is doing a business, he should be told, okay, US has given 12.5% additional TDS or whatever taxation on that. So something of that sort should come to them so that they can take decision immediately and they can ask for the business. So that is how I think the business has to be, and technology should help the customers to make the decision, and bank also should take the decision faster for them so the business can improve on that. This is from my side. Thank you.
Thank you. That's insightful. We're almost running out of time, and hearing all of them, what I summarize is that AI is the next step. Digital, getting more and more digitized is the next step. But at the crux of the thing, the question that we have to answer is, is it meeting the trust of the customer? Is the customer feeling, the decision what our AI tools, our models are giving is fair? Whether the bank is feeling the decisions what are coming out of these models are sound enough? Is the regulator, can the regulator trust that, whatever the models banks are using, are they explainable? Are they trustworthy? And lastly, the person the credit manager, I'll speak in the lending context, or, the credit manager who's relying on these models, are they, sound enough for him to take the decision? So I think that trust is an important piece. And, while digital lending is an incredible tool, it comes with a lot of extraordinary responsibility and extraordinary risk. And I think that we'll have to bear in mind. But thanks to all of you. But before we part, if any of you have any questions for any of them, please feel free to ask. We have a couple of minutes, and maybe we could use that.
I just want to add one point.
Yeah.
So when core banking evolved, people are thinking that is a primary system, which is now has gone backwards, and it has become more of a transaction system, feeding the information to other ancillary systems. So I think slowly digital LOS is also now becoming like a back-end system, and on top of it, AI, then agentic AI, Gen AI coming up. I think topping up of more features, pushing back the LOS. So slowly it's becoming like another core banking is what I could see in the next few years.
Absolutely, yeah. That's. Thank you. Thanks a lot, everyone, for your, such honest, answers and honest experiences. That really helps each one of us. Thanks so much for your time.
We do have a minute. Any questions you want to take? Yeah, we have one question. Quickly, we can have one question. Yeah.
I'll be just Yep, thank you, sir. And hi, I'm Murli, and I'm the founder of a FinTech company called Voltage. My question to the panel is, a couple of years back, there was a lot of excitement around flow-based lending, GST data being available. So I don't know if there is enough action happening here. I want to know from the panel if every one of you have a flow-based lending product, particularly leveraging GST data. Do you have a product where somebody can apply for a loan using their GST filings and get disbursement, instantly?
I'll take that up. So I guess principally almost all private banks, I can particularly say, we have some surrogate programs is what we call them. So this will analyze a customer based on his banking. This will analyze a customer based on his GST, on his ITR, or triangulation of all those. So those products are principally there in almost all private sector banks. That's I'm pretty certain about.
Okay. So, but is that actually still has to be complemented with the traditional, P&L, balance sheet, financial statements? Because then you're defeating the purpose to a large extent.
May or may not be complemented by income statements, is what we can call them. It depends on bank's appetite and how you want to take it ahead from there.
Public sector banks are also financing for against the GST returns. Almost all the banks are doing 20% of the whatever without going through the IT returns actually. They go through there. But of late we have seen a lot of delinquencies and frauds in the GST returns. Because earlier I said that because of the circular transactions within the related party transactions, with that they have built up their flows. So based on that, when the bank has given, then it will become difficult to repay also. So there are that's why some other checks are also been built in up, so that we can have correlate with the IT returns and as well as his other loan patterns also that has been seen subsequently.
And just one line answer. We don't ask, but we know. Because this is for our existing customers and we know them and then we give them also.
From a banking perspective, like lending is again divided into two. What you are saying is like parameter product, or he's saying surrogate programs, and there's one more judgmental lending. So I'm just taking away from digital lending. So when we are talking about these type of products, like if everything goes well, then also banker gets doubt that something is wrong, like some GST has been, if everything is correct, then also needs to be checked. If something is not correct, then also something has to be done. So I'll not say 100% is happening, but 60-70% funding happens on these type of programs, and 20-30% again becomes a judgmental lending.
So, Murli, I'll take a dig at that as well. So we do this, okay, but we just don't solely rely on the GST return. But we don't even break the experience of the customer. We are taking banking along with that. And then, there will be a banking turnover kind of, match which runs in the background. So there is a lot of triangulation. We don't solely rely on one document, but the GST turnover along with the banking gives us a fair comfort, and not just to me, it will give it to anybody, a fair comfort, to derive whether the GST return, whatever the return is saying is true or not, when clubbed with the banking.
Thank you.
Thank you. Thank you, panelists. I think seems like we are crucial on time, but fabulous session with you. Can you all have a huge round of applause for all the panelists out here? I think every lending decisions become a catalyst for growth and so many things that we have learned today. Thank you. And for doing the honors of felicitating the entire panel, I may call upon Malini Valsala, Chief Information Officer, Test House. Can we have you on the stage, please? Welcome, Malini. Well, the future of lending will not only belong to institutions that simply process loan faster. I think it will belong to those who use intelligence, data, and trust to create opportunities. Huge round of applause, everybody. Thank you, Suresh, sir, for joining in. I'll request Mr. Sanju Mangrulkar to please join us on center stage and accept the certificate from us. Can we have a huge round of applause? May I now call upon Koteswara Rao. Thank you, sir, for joining us. We are really glad to hear all the insights from the leaders out here. May I now call upon Darshan Rathi. Thank you once again. Very meaningful conversation. Can we have a huge round of applause, everybody? Thank you, Venkatasubramanian V. Thank you once again for joining in. Thank you for your insights. May I now call upon Manish Kumar. Thank you once again for your key valuable inputs. And thank you, Aarti Somani, for navigating a way forward for this fabulous conversation that we had from the leaders out here. Thank you. Can we have all of you to the center stage for a group picture, please, with the certificates? All of you on the center stage. I'll request Malini to please stay back, yeah, for the group picture. Welcome on, I think. Can we have a huge round of applause, everybody? With all that, we all know the future of banking is ultimately about creating better outcomes for people. Thank you, panelists. Thank you so much. Thank you for joining in today. Thank you.